Ladies and gentlemen, hello. My name is Eduardo Bogosian. I am the founder and current CEO of Maestri Investment Group. This is our annual 2020 meeting. It is February the 11th, and we'll be talking about the 2019 performance of our IPF and IPF X2 funds. The IPF, which stands for the International Power Fund, as we like to call it, had a time-weighted return of 8.29% according to MyFxBook, which is a third-party provider that verifies this information for us, and a 17.23% time-weighted return for the IPF X2. Both of these numbers exceed what our expectations were for both funds in 2019. I would like to point out that the X2 means that we use a 2 times leverage while using the same strategy as the IPF. Now, this does not mean that the IPF X2 will necessarily have a 1 to 2 relation when it comes to gains, as you can see. This happens because there are different times and amounts that are deposited and withdrawn from both funds at different times. Not only that, but also slippage occurs, which is the difference of time between the time we ask an order to be executed and the time it actually is executed at market price, which can vary from one to another, which is why you will not normally see a perfectly exact 1 to 2. Despite that, we still see a very close 2 times relation, and both still exceeded by a good margin what we expected 2019 to be. We expected no more than maybe 3% for the IPF, 6 for the IPF X2, but we did get the 8.29% and 17.23 time weighted returns for our funds respectively. I would also like to say that our annual meeting that was supposed to be held on January the 5th, if I recall correctly, we did not have that because there were insufficient people signed up. We did not see that would be in any way positive or an extra gain to our investors, so we decided just to have this one meeting. We still are open to questions or comments from our investors or potential investors through our website www.investmaestri.com, and you can use the contact us forum, or you can go to your whatever email provider you have and email contact@investmaestri.com, and either I or one of our associates will be happy to reply. The last thing we'd like to mention is our 2020 outlook. Currently, it is positive. We expect both the IPF and the IPF X2 to either meet or exceed their 10% and 20% respectively goals for the year. This is despite the US election. Some concerns have been raised in regards to the US elections that are coming this year. However, what we have seen in the markets previously, at least, is that there isn't that much of a difference when it comes to both foreign exchange currency as well as stock markets, depending on who is the forerunner or who isn't the forerunner in the U.S. elections. Investors tend to expect changes to be seen when actual matters start to begin being implemented, or at least strong promises that they will be implemented soon. So we would still advise towards our recommended monthly deposit to take advantage of the dollar cost averaging. That means that every month you make a deposit of a certain amount. You can use your local currency for that, but do it monthly. This way, on average, you should have a lower investment cost than someone who's trying to time the markets would. So making a deposit every month of an amount that you can afford to part with, that means an amount that will not affect your living standards, and to do it every month. This will help make a consistent habit, as well as decrease your average investment cost when compared to someone trying to time the markets or time the right time to get in. So do expect negative months. Although we were able to start and continue operating our fund in what has been one of the longest bull runs. Bull runs, which means when we have several months, one after the other, in which we have positive returns. This is not the usual scenario for the stock market or any financial market for that matter. We do expect to see things such as 2 profitable months followed by 1 negative month, by 3, 1, 2. These things varied, which is why we do look out at our funds at a more reasonable interval, which is a yearly interval, as is recommended due to the myopic loss aversion. Be sure to look that up if you do not know what that means yet. It is one explanation for the equity premium puzzle, and it's related to investor behavior, something that you, as an investor, should be knowledged about. Otherwise, things have gone exceedingly well. We have beaten our expectations for the year of 2019. We expect no overall positive and above 10 and 20%, as I said previously and respectively, for our IPF and IPFX2 funds. And once more, if there are any questions, feel free to contact us and to be heard. You can also use our social media accounts. And thank you so much for your time.